All right, today we're going to talk about mutual funds versus ETFs or exchange traded funds. They're very similar. Mutual funds have been around forever. I mean, a long time. ETFs or exchange traded funds came out, I don't know, 20, 30 years ago or whatever. They're very similar. There's different types of mutual funds. There's closed end, open end mutual funds, but we'll just talk about the open end type today. Open end are the kinds you've known forever. They're just mutual funds. They buy stocks and they redeem shares. And when you buy them, you buy shares. Okay. They're pretty good, but they're very similar. An ETF is a collection of stocks. A mutual fund is a collection of stocks. They can be actively traded or passive, like an index fund. Now, if I was going to relate a mutual fund to an ETF, the most similarity would be a index fund. Okay, an index fund like the Vanguard 500, Fidelity 500, almost every company has the S&P 500 index fund. Very similar. One of the biggest differences would be sometimes it's cost, but on index funds they're pretty cheap too. But it's cost and it's liquidity. You can sell an ETF by the minute. You go into a mutual fund and you're going to sell it at the end of the day. So you have to worry about the risk of crashing during the day. Even though you put in an order at 9:30 in the morning, it's still going to sell at 3 o'clock in the afternoon. With an ETF, it's quicker. You can get out pretty quick. Okay, so you don't have to worry about that intraday crashing. I like them just because even on the active managed ones, usually the fees are lower in many cases. But check your mutual funds. Sometimes mutual funds, you might have an overlap of 70, 80% of the S&P. But you're paying a 1% fee internal charge or a 0.5% when you could have bought an ETF for a 0.01. They call it 1 basis or 10 basis points, which is 1/10 of 1% a year. So you can get ETFs typically cheaper. They're more liquid. So that would be my choice in many cases. ETFs don't cover 100% of the market, but it covers probably 90 something percent of the market. For the average investor, it covers plenty. And so I'd typically choose an ETF over a mutual fund.